Okay, class. Shall we proceed?
Yes.
Okay. So okay, now we look at to the procedures procedures before accepting nomination. When you are approached by the client, okay, to become the auditor, or you nominate by the client to become the auditor. So before a new client accepted, the auditor must ensure that there are no independence or other ethical problem likely to cause conflict with the ethical codes of ethics. So means that there is no threats to fundamental principle. Okay, fundamental principles and also other ethical problem. Okay, so other ethical problem, you have to look at to the example of the threat given in the previous chapter. If you are serving as the board of directors in that client company, if you have a relationship and so on, because some of the ethical problem okay, might disqualify you from disqualify you from become the auditor. Okay, disqualified to become the auditor. So means when you accept the appointment, the nomination, there is no independence or other ethical problems is likely to cause conflict with the ethical code of ethics. So the new auditor should ensure that they have been appointed in a proper and legal manner. Okay. Next, before they accept an appointment, nominees auditor, okay, nominees yang dicalonkan, auditor must carry out the following procedures. So, ensure professionally qualified to act. So this is what I said just now. Okay, you must be qualified to become the auditor, and there is no certain ethical issue that disqualify you from become the auditor. Okay, and consider whether they could be disqualified on a legal or ethical grounds. So you have to look at back what are the situation or what are the ethical issue that might disqualify you become the auditor. Okay, and then ensure existing resources adequate. So as audit, when you accept the nomination, okay, as a partner, you must form your team. Okay, audit team members. Okay, which comprise of the partner, audit partner, audit manager, okay, audit senior, and audit junior. Okay, so these are the partner. So consider available time, staff, and technical expertise. So if you audit, let's say if you are audit the oil and gas company like Serba Dynamic, so do the auditor, okay, have technical expertise on that area? So that is called resources adequate. Okay. So Ernst & Young must identify whether they have available time, staff, and technical expertise, okay, to do the audit. And obtain references, can make independent inquiries as to the director's integrity. So you have to find out what are the situation of director's integrity if the directors are not personally known. Okay, if the partner, normally the decision is made by the partner, audit partner. If the audit partner does not know, okay, how the personally or personal profile of the directors in terms of their integrity, so you must make independent inquiries, or you can make a search lah, okay, regarding the integrity of the directors. And you have to communicate with the present auditor. So this is what I say just now, communicate with the present auditor. Okay, you must follow or you must comply with the ethical requirement. Okay, inquire whether there are any professional or other reason for not accepting the nomination. Also courtesy to the outgoing auditor. So this is another terms for the proposed, for the existing auditor. Okay, current auditor, existing auditor or outgoing auditor is the same term. Okay, and what we call what I said just now, must have a proper compliance to the regulation on communicating with the present auditor or outgoing auditor. So this is acceptance procedure. Okay. Any question on the acceptance procedure? Class? Any question, class?
No, madam.
Okay, clear? Clear.
Yes.
Okay, thank you. Then now we go next okay. So we have discussed the procedure, and then these are the letter that you need to submit or to write to the existing auditor. Okay, so this is an example of initial communication. So two retiring and co-chartered certified accountant. So means that this is the retiring auditor ataupun proposed the existing auditor or the current auditor or the outgoing auditor. Okay, dear sir. So this is reference new client company. Okay, we understand you are currently retained as the above company's auditor. Okay, we have been asked to allow our name to go forward for nomination as auditor of the company, and we should therefore be grateful if you would please let us know whether there are any professional or other reason why we should not accept nomination. So the hearing and co, so this is a proposed auditor. Okay, and then you write as a chartered accountant firm. Okay. So you wait until the so this letter can only be issued, okay, when client give permission. Give permission. Okay, remember when client give permission, this one. Okay, does client give this one? Does client give permission to contact all auditor? So if yes, write to all information pertinent to the appointment section. So this is the letter. Okay. After you write the letter, procedures after accepting nomination. Okay, so after you accept, so you get all the information, then you accept the nomination. Okay, the following procedure should carry out after accepting nomination. Okay, ensure that outgoing auditor's removal or resignation has been properly conducted in accordance with the legislation. So removal of auditor or resignation of the auditor has been properly conducted. So in the case of Serba Dynamic, the KPMG okay. The shareholders pass the ordinary resolution jadi okay to change the auditor. Okay, so that is in the case or at the previous at the earlier part. Okay, but then now the board of directors or as a major shareholders, they have already take back that ordinary resolution, and the KPMG, KPMG voluntarily resign. Voluntarily resign. So because of the situation happened. So means here resignation has been properly conducted in accordance with the legislation. The new auditor should see a valid notice of the outgoing resignation or confirm that the outgoing auditors were properly removed. So in this case, there is no removal but resignation. Resign as an auditor because they feel that they don't think fit. Because there is already have the issue on the threats to fundamental principle. Where KPMG said they does not able anymore to perform the audit with objectivity. And ensure that the new auditor's appointment is valid. New auditor's appointment is valid means that the procedures for appointment of the auditor is properly conducted. The new auditor should obtain a copy of resolution passed at the general meeting appointing them as the company auditor. So if there is any resolution passed at the general meeting, so the new auditor should obtain that copy. Set up and submit a letter of engagement. This is one you have agreed on the nomination to the directors of the company. So to have a bind agreement between the clients and the auditor. And then other matters you should look into when you are accepting the appointment. You have to ask or you have to look at whether the previous auditor have fees still owing by the client. The new auditor need not decline appointment solely for this reason. So if there is still a fees owing, fees owing, audit fees, this is audit fees owing to the client by the client. You should not take this the reason to reject the appointment. Because you see that the clients not able to pay the audit fees, then you make a decision to reject the appointment. So you are allowed to do, but it's not encouraged by the SCCA Code of Ethics. They should decide how far they may go in helping the former auditor to obtain their fees, as well as whether they should accept the appointment. Once a new appointment has taken place, the new auditor, this is important, new auditor should obtain all books and papers which belong to the clients from the old auditors. This one. So means if KPMG hold all the documents, all these documents should pass to the file. The former accountant should ensure that all such documents are transferred unless there is a lien over the books because of the unpaid fees. So if there is the SCCA Code of Ethics give the situation for the outgoing auditors to retain the books and papers or all the information in their company because of the lien, the legal right to hold on to them over the books because of the unpaid fees. The old auditor should also pass any useful information to the new auditor if it will be of help without charges unless a lot of work is involved. Without charge. Any question on that? So in terms of the the acceptance of the client. Clear kan?
Madam, I have
Mungkin yang
Okay, Mina teruskan tanya.
yang tu yang last kali yang dia cakap the auditor should also pay useful information to the new auditors if it will be had without charge unless a lot of work is involved. Macam mana?
Okay, unless a lot of work is involved. So means when there is a if let's say the dissemination of information, okay, the information dissemination is taking a long time or involving the lawyer, the legal requirement. So maybe a lot of work involved, and okay, the outgoing auditor can charge the new auditor. Clear?
Maksudnya yang kerja-kerja macam mana tu?
The procedure for all books, okay, when you deal with a big company, okay, some information, okay, is put under the law, the legal perspective. So ada some information that we need further times to disclose. Itu maksudnya it's not immediately you will get that information. So maybe when it relates with the legal perspective, okay, kadang-kadang dokumen tu dengan pihak lawyer. So the lawyer will charge certain amount on that. So unless a lot of work is involved.
Oh, okay.
Okay. Anything? Siapa lagi tadi nak tanya?
Saya.
Si Mina, Syamina tadi.
Ni Yasmin, but
Okay.
The question is, this is usually berapa fees auditor?
If you look at to the actually the fees is not fixed, Yasmin. Okay, the auditor will charge the audit fees based on their detail of work entail, okay, the urgency of the work, the experience, the knowledge they put, okay, and the time allocate. Okay, but the normally the general guideline given by the CCA Code of Ethics is normally based on their net profit. Okay, if I'm not mistaken, net profit not less than 20% or 15% like that. I'm not sure. Tapi based on net profit, dia ada certain limit of percentage lah. And depends on the profit of the company juga. So if a bigger company, normally the audit fee charge is a big lah, because the time spent and the expertise. So this one. But to the when you want to accept the appointment, then Jasmine, the resources, so time, staff, and technical expertise. So if you need, if let's say in the audit team members ni, okay, you do not enough technical expertise, then maybe you hire consultant, outside consultant. Then you will charge the you will transfer the charge to the apa tu client lah. Macam tu. So the audit fee will be higher lah.
Oh, okay.
Okay. So that's why you have to look at the resources, whether the company resources is enough or not. Okay, if sometimes if the resources is not adequate, then you should hire outside. So when you hire technical expertise outside, so the charge will be from the consultant is also higher. Okay. So, but it is you cannot, when you charge the audit fees to the client, okay, you cannot charge at the, you must charge at a reasonable price. Macam itulah, reasonable price. Okay, means if in the situation for the company's net profit within this category, okay, let's say 5 million, so berapa you kena charge. So samalah dengan company yang lain. So means at the same or at the par with the others. Okay, you cannot offer lower or higher than the what others offered. Okay, Yasmin?
Yes, okay.
Okay, so now we go to the risk assessment. Okay, most firm has client acceptance procedure reviewing the management integrity. This is important. Management integrity and risk of the prospective client. Okay, so when you are going to accept the appointment, okay, of course, okay, during the audit letter, okay, you might need to have a good communication with the management. So, and you need as your right to get access to all the information and record when you consider necessary. Then you require management integrity is with the information given to you. Okay, so how you are going to measure the management integrity? So, and you have to look at also on the risks of the prospective client. So as well as contacting previous auditor, many firms, particularly larger firms, carry out other stringent checks on potential audit clients and their management. So what are the factors to be considered? Management integrity. Integrity of those managing company will be great importance. Auditor will be particularly interested in management integrity if potential client company is controlled by one or few dominant personality. You tengok kat sini. One or few dominant personality involved in that company. So that is actually very difficult for you to see the independence of the board of directors later. So that is also one category of management integrity. Other than that, you look at in terms of the risk. Okay, so which company is considered is low risk company and high risk company. Okay, if yang which I said just now, where you accept, okay, even though you are not get the client permission to contact with the previous auditor, then you still accept the appointment. So you have to bear for the risk. Okay, so what are the category of risk of the company? So we divide into two. One is low risk company and one is high risk company. Okay, for the low risk company, you have to look at the good long-term prospect. So this company have a good prospect. So where you want to know the prospect of the company, okay, maybe you will read their all the annual report. Okay, the previous annual report. Okay, the company website. Okay, any release media. Okay, release media. Okay, about the good or long prospect of the company. Okay, and then you can look at to the share of the company, earning per share of the company and so on. Well-financed company, okay, strong internal control of the company, conservative, prudent accounting policies, so accounting policies, competent, honest management, and few unusual transactions. So few unusual transaction is such as no selling of the non-current asset. So selling of non-current asset is one of the unusual transaction in the company. So that is the category of low risk company. So if you if the client does not give a consent to communicate with the previous auditor, then because of your investigation, you identify that these are all company have these all factors, then you can consider this is a low risk company. Okay, for the high risk company, okay, there is a poor recent or forecast performance. So you look at to the performance of the company, always have a loss. So or company involved in the wrongdoing activities. That is one thing of the management integrity. Likely lack of finance. Okay, there is no creditors to finance their operation. Bank also does not want to grant the financing. Significant control weakness. Okay, internal control is weak. Evidence of questionable integrity, doubtful accounting policies. So accounting policies also weak. Okay. Lack of finance director, knowledge in finance, let's say lah. And significant related party or unexplained transaction. Significant related party is too much significant related party or unexplained transaction. Unexplained transaction. So like KPMG blame Sebadinamic on the revenue, okay, happen outside the country, and they said there is unexplained transaction. So this, if you identify the company have this kind of factors, so you have to consider this is high risk company. So if you accept it, later on you might have impact to your fundamental principle. Okay. Any question for the high risk and low risk?
No.
No, clear?
Clear.
Okay, then engagement economics. So expected fees. Yes, clear or other question? Yes to means you have a question or you clear on the explanation? Class clear, eh?
Clear, madam.
Okay, good. So expected fees from a new client should reflect the level of risk expected. So fees tadi Yasmin, expected fees from a new client should reflect the level of risk expected. So if you bear high risk, so high audit fees lah, of course. They should also offer the same sort of return expected of client of this nature and reflect the overall financial strategy of the audit firm. Okay, and another issue is relationship with the client. So the audit firm will generally want the relationship with the client to be a long-term relationship. So, but when you build up a long-term relationship, so make sure there is no conflict of interest arise. Okay, you need a good relationship because you need the information from the company. So that's why you must maintain a good relationship, okay, with the company, but make sure that relationship does not have any conflict of interest or does not have any impact to the fundamental principle. That is relationship with the client. Ability to perform the work. So you audit firm must have the resources to perform the work properly. And sources of information, okay, the resources will include time, availability of the suitable qualified staff, as well as relevant specialist knowledge or skill. And then what are the sources of information about new client? You can get inquiries of other sources from bankers or lawyers. Okay, you can review the document. You can contact with the previous auditor and review of the rules and standards. Okay, and you can get approval. So when you approve, okay, the to become the auditor of the company, then you have to issue letter of engagement. Okay, approval. So approval means you already accept the appointment. Okay, when you accept the appointment, then means you have to explain, or you have to describe, okay, what are your duty and what are the management duties. So you must get the approval from the board of directors in terms of the those duties, okay, between auditor and the directors. So that approval is considered as letter of engagement. So for the letter of engagement, you have to look at to the content of the letter of engagement. The terms of the audit engagement must be agreed with management and recorded in the audit engagement letter. Okay, so must be agreed. So when you send a letter of engagement, LOE, so LOE will be issued by the auditor. Okay, issued by auditor, and it should be submit to the board of directors. Okay, board of directors, when they get the letter, they have to read and understand and sign the letter of engagement and return back to the auditor. Okay, return back, okay, to confirm that they agree on the engagement. So there are two situations here. One is the precondition of an audit. The precondition of an audit is present and confirming that there is a common understanding between auditor and management of the terms of the engagement. So the precondition includes the management use as an acceptable financial reporting framework in the preparation of financial statement. So this is a precondition, okay, when you accept the when you release the agreement, okay, between you and the client. So first, you must look at that management use acceptable financial reporting framework in the preparation of the financial statement. Okay, and second, management and where appropriate, those charged with governance agree the premises, okay, on which an audit is conducted. So that is the precondition for an audit. One is in terms of financial reporting framework. When they prepare the financial statement, so you have to look at what are the financial reporting framework is applicable in the company. So whether they follow or not the FRS. Okay, if they do not follow the FRS, what standard they use? Okay, is it acceptable by the international requirement? Okay, and then you must agree which premises you want to form your audit. Okay, which premises? If let's say the company have 10 branches. Okay, 10 branches. So which branches you want to perform the audit? Okay, as to conclude that one branches will use as a sample to the whole branches. Okay, so you have to agree with the premise on which an audit is conducted. And then, in order to establish whether the precondition of an audit is present, the auditor is required to determine whether the financial reporting framework is used is acceptable. So this is the auditor duty. The auditor is required. Obtain engagement, okay, from management that it acknowledges and understands its responsibility in respect of the following: preparation of financial statement, internal control, and to provide the auditor with access to all information that is relevant to the preparation of financial statement. So you have to acknowledge and understand responsibility. So in your letter of engagement, okay, you have to state, okay, whose responsibility to prepare the financial statement, whose responsibility to maintain the good internal control system, and you have also to state to the management that you have a right, or the management can have to provide the auditor with all the information that he considers necessary in preparation of financial statement. So these are comes under management responsibility. Okay, if this precondition are not present, the auditor must discuss the matter with management. Okay, if situation cannot be resolved, the engagement must not be accepted. So you can decline the appointment back. Boleh tolak lagi. Okay, so these are the engagement letter. Once the audit firm has accepted the appointment, the term of the engagement must be agreed. So that's why I said just now, agreed between the auditor and management. So when they agreed, okay, when the auditor, okay, when the board of director agreed, sign. So this is considered agreed. Okay, and return back the LOE to the auditor. Okay. Okay, the audit engagement letter should be sent to the client before, okay, important before the start of the audit to help avoid misunderstanding. Before, okay, the form and content may vary, okay, but must include the following. So this is the must, okay, in the audit letter of engagement. Objective and scope of audit, responsibility of the auditor, okay, responsibility of management, indication of the applicable reporting framework to be used, expected form and content of any report to be issued by the auditor. Expected form and content, so you kata you have to expect for the unmodified report. Okay, so means when you expected for unmodified report, the financial statement should be presented with true and fair view. A statement that there may be circumstances where the actual form and content may differ from what was expected. So you have to say that if you identify any circumstances, okay, you might differ your report. So differ tu maksudnya you akan keluarkanlah modified report. So you have to state in your letter of engagement. So that is must. Must So dia ada dua, satu compulsory. Ni adalah wajib, you have to put in the letter of engagement, and this one is optional. Okay, additional matter. So audit engagement may. Tadi tu must, ni may. Okay, so further detail regarding the scope, any other communication, if the fact that due to the inherent limitation of an audit and those of internal control, there is an unavoidable risk that some matter misstatement may not be detected, okay, even though the audit is properly planned and performed in accordance with the ISA. So you have to state in your letter of engagement this one, because you are based only on reasonable assurance. You might not able to detect all material misstatement. So you have to put in the letter of engagement to protect you from legal liability later. Okay, to protect from the legal liability. Arrangement regarding planning and performance, expectation that management will provide written representation, and so on ni lah. So all banyak so you can read by your own. And when you want, so this is, you have to know the must ni. Yang compulsory ni you have to know, because maybe in the MCQ question they will ask you which are not the item, okay, must be included in the letter of engagement. So you ingat saja yang compulsory, so other than that semua masuk dalam bawah additional matter. Okay. So recurring audit, so yang audit berulang so if let's say you are a new auditor, so if you proceed the next following year as a auditor, so you akan jadi continuing auditor. So when you want to this is called recurring audit. Okay, so when you is it compulsory to you to send a letter of engagement every year? Okay, class, is that compulsory to send letter of engagement every year if you perform recurring audit? Just guess.
No.
Okay, no so yes, good. Because no need, okay, unless certain situation happen. So on recurring audit, the auditor must assess whether the term of engagement need to be revised. If term of engagement need to be revised, then you have to submit a new one. Okay, and whether there is a need to remind the entity of the existing terms. The following factors may indicate that this would be necessary. So if let's say on the first year of audit, okay, the board of directors agree on the term, but actually they don't agree. But actually they misunderstood what they agree. So you need to revise. So any indication that the entity misunderstand the objective and scope of an audit, any revise or special terms of the audit engagement, recent changes of the senior management, significant change in ownership, significant change in nature or size of the entity business. Okay, let's say last year, okay, they only have one branch. So the following year they have already 10 branches. So that is changes in nature or size. A change in legal or regulatory requirement. So legal or regulatory requirement has been changed. Let's say there is a change or revise in the ISA or revise in the Companies Act clause. So you need to revise also your letter of engagement. A change in the financial reporting framework and a change in other reporting requirements. So that are the things that you need to consider, okay, whether you want to revise or not. Once you revise the content, then you have to submit a new letter of engagement to the client. Okay. So that is in terms of the recurring audit. And then acceptance of a change in the term. Okay, a change in the term of audit engagement prior to completion may result from a change in circumstances affecting the need for the service, misunderstanding as to the nature of an audit and related service originally requested, and restriction on the scope of the audit engagement. So that are certain situation might arise from these changes. Okay. Okay. So these are the questions. Okay. The question. This is the situation where. Okay. This paragraph. If the auditor is asked to change the audit engagement before it is completed to an engagement providing a lower level of assurance, such a review of related service, the auditor must determine whether there is a reasonable justification for doing so. Okay, because there may be legal or contractual implication will apply. So if let's say during your audit work, okay, from 1st January 2021 to 31st, okay, katalah 1st January 2022 to 31st December 2022, next year So you do the audit. You already send them the letter of engagement. But during the audit, the board of director asks you to change the content of the engagement. So you need to follow what the board of director said. Okay. You have to look at in terms of the level of assurance. Okay, and reasonable justification. Okay, why you need to do it. So it's not automatically you can follow what the management said. Okay, so that is the clause given by the ISA. However, if the auditor cannot agree to change the term of management and to change the term and management does not allow the auditor to carry on with the original audit engagement, the auditor must withdraw from the engagement and determine whether there is obligation to report this to other parties. Okay, so that's what you do lah. Okay, clear So if you are not agree, if the auditor cannot agree to a change and management does not allow the auditor, so dia kata the auditor have to stop the engagement. So you have to withdraw from the engagement. Okay, then now you check, can you answer this question? Okay, which of the following procedure should not be carried out after the audit firm has decided to accept appointment as auditor. So remember tadi kita ada precondition before the acceptance and after acceptance. So which one is not doing after acceptance? After. Okay, perform check to ensure there is no legal or ethical reason why the new audit firm cannot act as auditor. So this one should be happen after or before?
Before.
Okay, perform check to ensure there is no legal or ethical reason why the audit firm cannot act as an auditor. This one?
Before.
Before, Before. Ensure that the outgoing auditor's removal resignation has been properly conducted. So this is after. Ensure that shareholders have passed an appropriate resolution after and submit a letter of engagement after. Okay, so means when you read this book, you must properly know which one has done before and which one has done after. Okay. So you can this one these are the factors. Okay, so dia kata describe the matters you should consider and the investigation you would carry out before. So this is before. Tadi tu cerita after, and describe the ethical procedure that you should follow before and after accepting the appointment. So in this situation you must thoroughly know what is the matters before and before appointment. Okay, satu tadi before accepting appointment. Okay, we should consider the following matters before accepting appointment. Before accepting appointment and before appointment. Okay. Ada different and after appointment. So I hope you read it back to digest all the information for section A and section for section A. All answer for section A. All content in section A. Dah pukul 1 kan. So any question class? So this afternoon class, okay, since I got a course after at 2:30, so I already put the question in the Google Classroom. Okay.